when you're buying a home, it can be scary. There's so many things to think about. Money, credit, insurance. What do? Well, you ask an expert to help, and that's where Teresa Cowart, our coastal expert, comes in. Teresa Cowart of RE/MAX Accent. Hi, Teresa. It's great to see you.
It's great to see you, too.
So I know you're going to help us out here. Let's start off with the obvious. What is earnest money?
Earnest money is good faith money. Earnest money is the money that you give to the cooperating agent's broker that basically is saying, I am writing an offer. Here is my good faith money that I'm serious.
So how much earnest money will we have to put down?
Okay, so that depends on the situation. And the price of the home determines that a lot of times. If it is a lower priced home, it may be just a couple $100s. If it's a higher priced home, it may be several $1,000s. If it's new construction, it may be a percentage of the sales price, plus any upgrades that you add. It's just a variable depending. Your realtor can guide you through that and let you know what's reasonable. If it's a multiple offer situation, you may want to put down more money to make it look more serious, because that's what earnest money is. It's to make you look serious.
So let me ask you this. If I'm selling my home and the buyer backs out, do I get to keep the earnest money?
That depends on whether or not they back out during the due diligence period, and whether or not it's a VA or an FHA loan, and the reason they defaulted. If they defaulted because of the appraisal and they're FHA or VA, then probably you don't get to keep it. But if they default after due diligence and it's conventional or it's a cash deal, then the chances are good you will get to. It really depends on how the contract is written. So you really have to pay attention to how the offer, when it comes in, you need to read, or your realtor needs to advise, and you need to read your contract. It has a lot to do with that. If your realtor says, oh, they've asked for 45 days due diligence, we're not doing that. There's a reason for that, because that's too long. It covers them too long.
So much terminology, and it can be overwhelming, and that's where a good real estate agent comes in. What about good faith estimate? What exactly is that?
The good faith estimate comes from the lender, and that is how much money you're going to need to close typically. It breaks out what your closing costs are. It has a lot of different figures on it, and your lender should go over it line by line by line. It has the sales price, it has the estimated taxes, it has the estimated insurance, it has interest, the days based on what day you're closing, it has that on it. It has everything on it. It should have the closing cost, and you should kind of have a really good idea of what your closing costs are going to be and what your payment is going to be.
We hear so much about the importance of keeping a good credit score. What kind of credit score would I need if I wanted to purchase a home?
Okay, so most of them require you to be 640 and above. It really depends though on the loan program. The higher the credit score, the better the rate on pretty much all of them. But some programs will allow you to have a lower credit score than others. Actually, even some mortgage companies can work with you with a lower credit score than others. So it's a case by case.
So how do you decide how much you can afford when you're buying a home?
You need to talk to a lender. You need to do that first before you start looking at homes, because when you're online and you get in one of those lovely mortgage calculators, they don't take into account taxes and insurance. Really, if you put in $200,000 at 5% interest, you're just getting the principal and the interest. You're not getting the insurance and the taxes, because they don't know that. So you may think that your payment's $1,000 when in reality your payment might be $1,400.
So mortgage insurance, you mentioned insurance. So mortgage insurance, is that something that I can avoid, or will I always have to pay mortgage insurance?
You don't have to pay mortgage insurance if you put 20% down.
20% down and you avoid mortgage insurance.
Some loan programs don't have mortgage insurance, some do. And if you put a certain percent of money down, mortgage insurance is just insurance for the lender that you're going to pay them back. So, because you don't have enough skin in the game. So, if you have enough skin in the game, you don't have to pay mortgage insurance. And some programs don't have mortgage insurance, but they have something else. It's just, you really need to talk to your lender about which loan program works best for you. That's not really my job. That's the lender's job.
So another thing to think about, I guess, when you're buying a home as well, you want to make sure the home is in great condition. And of course, we live in an area where some of the homes suffer flood damage. How can I be assured that I'm buying a home that hasn't suffered flood damage?
That is addressed on the seller's property disclosure. There is a question that clearly asks that. Has this home ever been flooded? Whether it's from a storm or whether it's just from your bathtub overflowing. So they are required to answer that question. Now, if it's an as-is home, you may be taking that risk. But other than that, it should be addressed on that seller's property disclosure. We also encourage anybody who's buying a resale home to have an inspection. A lot of times the inspectors can pick up on that as well. And if you really want to know, ask a neighbor, because they'll certainly tell you.
So along that same line, how do I know if the property is actually located in a flood zone and if I'll need flood insurance?
Lenders pull a flood certification, so they will know for sure and be able to tell you and actually give you pricing on that. Or you can go on FEMA.gov and there's a flood map. You can definitely tell there as well. But it's a lot easier for the lenders to just pull it and tell you. And they're the experts, so let them do their job.
And of course, anything that we've talked about, the money, the credit, the insurance, that's where you guys come in.
Absolutely, it's what we do.
And of course, that's why you're the expert. Thanks a lot, Teresa. It's always great to see you.
It's always great to see you too.
If you'd like more information on Teresa Cowart with RE/MAX Accent or any of our coastal experts, just check out our Coastal Experts page at WSAV.com.